live trading system results for the 250K and 50K portfolio on Tuesday, March the 28th. Minus 29.50 live and minus 5.50 on the 50K portfolio. My VPS went out for about 30 minutes and I had to manage the trades manually, so we had some discrepancies there. So tough week so far with extra slippage, VPS outages, difficult price action. We had an equity peak last Thursday at the end of the day, and we've had 3 down days since that for a rapid drawdown. Down on the week, still up on the month and on the year. And, you know, we've gone through these patterns where early in the week it's challenging, and later in the week and later in the month it's favorable. So the positive news is we are coming into the last 3 trading days of the month, of the week, and the month. And so towards the end of the week and end of the month have been seasonal. Those are lining up. So we have the Friday is the last trading day of the month, and it's the last trading day of the week. And so those are lining up. The last 3 Fridays have been down, and last month, the end of the month was down. But longer term, those are favorable cycles for us. And since we are down early in the week, I also want to show you what I think the market is going to do and the playbook for the market for the rest of the month. It's also probably favorable for us. So you see, we talked about a converging channel, and here was the Fed low last Wednesday, the Fed high, and then the market made narrower and narrower moves within that channel, and it took out the low here. So it took out that Fed low finally. We talked about how the market was propped up, endlessly propped up, and it was yesterday. It was endlessly propped up, and then it gapped down and went down today to where I thought it should have gone yesterday. And then it took out those lows, then it was propped up again. And so the liquidity is still there. It's kind of a dormant stealth bull market environment for the market to be propped up. And so what I've seen divergent channels or converging channels followed by diverging price action, which means that the highs, it could then turn around and come out here and take out these highs by the end of the month. And so would be interesting to see that strong uptrend. You know, we're coming into the end of the month, we're coming into the end of the quarter, and so you get this range, and the market head fakes, takes out the lows, and then comes back and takes out the highs. And that is in the Nasdaq. The S&P is still towards the top of that channel, and so that's what I think the market's going to do. Come and take out the top of this channel by the end of the month. We shall see, though. There was no fall through to the downside today. The market looked weak down here, but then it just kind of propped up and went up into the close. And so coming into the end of the month now, potentially a strong up move, and we've been getting some more solid up moves and down moves. So I went back and tested our current portfolio in multi-charts going back. This is just through December. I set the date to go further back, but I added a function to where it'll only show the trades through this past December. So we can take a look, and you can see a lot of back and forth in here. And we're in this normal drawdown right here that we've been at recently. And also what I want to show you here is I was able to break down the difference between the long and the short trades and the pattern that I suspected. Longer term, the long trades are twice as high. The average trade profit is around 2 times as much on the long trades versus the short trades. But what you see here is since the beginning of December, the short side is net negative. So for 4 months, we've talked about how there's short fighting, how it's difficult to short the market, and you can see that also in the performance summary. Short trades are net negative. It does help. Now this is the closed trade drawdown, not end of day drawdown, and so we've talked about the differences between that. That number is going to be larger, and the reason why, I'll go over and explain that again, is if you have an equity peak here on, say, a Wednesday, and then you have on Thursday your equity is doing this, you're closing out trades up here, you're up 10K, and you come out here and you end the day, you're only up 2K. Well, you had a new end of day equity peak from the previous day. So Wednesday you closed here, Thursday you made 2K, Your closed trade equity peak was about 10K though. So you're in an 8K closed trade drawdown. 8K closed trade drawdown, but at an equity peak on an end of day basis. And so your closed trade drawdowns can be bigger than your end of day. Our risk is measured by our end of day risk. And so the short trades are net negative. So we're working on the short side. I've looked at some ways to improve the short side. But the one thing you don't want to do is in 4 months, a 4-month cycle where it's strongly, this has been moving this way. It's been stronger and stronger on the long side, weaker and weaker on the short side. The average trade profit has been getting smaller on the short side, which is interesting because we're not really in a bullish environment. And even in 2020, when the Fed stimulus was out, we had better short trades than we are having right now. And so it's interesting how difficult it is to short this market, but you don't want to close out. You don't want to just stop trading your short side because it improves the diversity and reduces the worst case drawdown. It also, if the market does cycle to the downside, then and all you have is long trades, then you'll lose that diversity on that cycle. So let's go over the trades on the day, and so you can see what I'm talking about. Here's the equity curve once again. Here's the total trade analysis once again for this particular portfolio setup. And we continue. One thing you do get is this afternoon rally, and you see this in Cobra CT3. This is a strategy that we have in our money management algorithms. As an example, you get the open code for that in the money management algorithms. But if you take a look here, the last 3 days, on Friday you saw this, yesterday you saw this. It did sell off in the afternoon, and then today you saw this. We got in a little early, but this strategy was still profitable. It tries to catch these moves right here because as the VIX shrinks, you continue to always get these moves, and so in a bull market. So that's one of the things we're looking at is more Cobra CT3 type trades. We got to be balanced though, because you never know when the short side is going to come back. Other trades in the S&P, we're at 3 for 7 in the S&P. Cobra 3 stopped out on the E-mini S&P. Momentum reversal, stopped out or covered at the end of the day. Opening chop was a highlight. The chopper strategies did well. Got short, got long, got short, covered here. Pretty much as good as you can get. And maybe would have done well had we just traded this all day long instead of a time window on that. We also had this one right here, and so our chopper strategies did well for us today. Helped us get some gains and reduce our losses. Tick chomp was down a little bit on the day, got long, got short, and then held on and exited there. Could have held that a little longer. Tick count trend turnaround dynamic. First trade was a loser, second trade was a winner. The net result of our new strategies is up today. And so we had 1, 2, 3, 4, 5, 6, 7 strategies trade today. And we're 3 for 7 on the S&P. And let me take a look. We were slightly profitable on the S&P today based on the hypotheticals. I didn't break down. Let me break down the live. See, our live results were also profitable. Nasdaq only had one winning trade on the day, and that was AT 2022. We talked about this yesterday, how it's been a difficult strategy to trade this year, and we finally had a short winner. It's interesting because the longs and the shorts have lost, and especially the short side has been difficult, but this strategy was profitable on the short side, exited at just the right time on the day before the reversal happened. So it exited right here at 2 o'clock, at the end of 2 o'clock at the open of the 215 bar, and then Viper lost on the opening trade, then had 2 trades to come back to get almost a break even. And AT 2020 had a break even trade, had a break even stop right here, and just hard to short this market. As long as it's hard to short this market, we continue to look for higher prices and consider these pullbacks stealth pullbacks in a stealth kind of a bull market, technically speaking. Fundamentally, not so much, but technically, it's acting more like a stealth bull market. Cobra 3 down on the day. Tick Pulse down on the day. Momentum reversal just stopped out at the end of the day. All right, 2 losses on the day on this. So it was the highlight yesterday, but it lost today, and so we were, I believe, 1 for 7 on the Nasdaq. So challenging day on the Nasdaq. The thing I'm positive about is the end of the month setup, like we talked about. The cycle at the end of the week, the end of the month, and the market setup as we go in to the end of the week and the end of the month. So once again, these are the trades on the day for Tuesday, March the 28th, 2023. Hey, David Bean here. Welcome to Capstone Trading Systems YouTube page. Be sure to subscribe to join our community of algorithmic traders. We are real money traders. We share our winning streaks, we share our losing streaks, as well as market updates, strategies, and coding tips.